Okay. Dollar CAD, well, let's have a look at the weekly chart. 2011, that's when the bull market started. Massive bull run up. Now, the problem is, since we peaked in 2016, we've really just gone sideways. So that is a full 8 years of sideways action. And this is why I moan so much about sideways markets. I mean, this really is quite incredible. 8 years of just going sideways. We're now heading up towards the upper end of the range, of course. So maybe we can get to 146.40, which is like that upper trend line there. But it's just worth getting that perspective. Okay, so if I isolate it down to 2021, I can say we've been in a bull trend quite clearly. But again, punctuated with a significant sideways period, which ran from, September 22 up until, well, it's almost November 24. So that was a 2-year sideways trend, and an even narrower sideways trend. Again, frustrating. So, of course, I got excited when we broke above the trend line. Here, doesn't look like a significant break on the weekly chart. So I'll go to the daily chart now. And this was the break that I got excited about. I thought we were going to the moon, but the market just reversed. I've got no idea why it chose to reverse there. Retested the break point. If I remember correctly, I was trying to get us in there. And it's
You were
right. We caught this move, didn't we?
We did. Yes, I made some nice profit.
Yeah. Okay, so that was the move that we caught. And again, to be honest, this surprised me. And this is irritating because we didn't get back to the trend line and then we took off. Really irritating because, as you know, from here, from the beginning of November, I was talking about this big buying opportunity, but it never really materialized until I could say the 6th of December. And the break was on the 13th of November. So it was 3.5 weeks before we took off. Anyway, we are taking off now. Finally, it's developing. You all see why, yeah? You all see that it's just the break of the sideways channel. This is a consolidation pattern in what I thought was a bull trend. I mean, it's a bit tricky to call it a bull trend because this is hardly the biggest bull run in history. We only, from 2021 to from mid 2021 to mid 2022, we had something of a bull trend, but let's face it, who would have been able to run a long position over that? I mean, the deep pullbacks that we had, anyone with a trailing stock would have really struggled. This market has been so tough to trade. So I think, well, we are clearly accelerating to the upside. We're building momentum to the upside. The daily stochastics are overbought, but I'm not going to pay any attention to that because I believe that we are in a bull trend. When I go to the weekly chart and back again, it does look like we have got some decent upside potential. And who knows, we could get to 146.40. That would be roughly 300 pips away. Seems reasonable. Seems like we're building upside momentum. Don't really think I can say anything else about that. Having got the initial move and then started to miss this next leg, I've been trying to chase it and putting buy orders in, but I seem to keep missing it. I mean, I've been talking about being bullish at this for quite a long time. I don't know if any of you managed to buy it and hold it, but
I've just got a small question. When it comes to the upper trend line and you see a clear rejection, would you then maybe short, or because we're in a bull trend, you wouldn't do that?
You know what? I probably would actually. It's such a significant trend line joining such significant peak that I think I would. This one had not quite a bearish engulfing candle, but a pretty negative candle on the weekly chart. This one didn't. But yeah, I mean, look, we could stay in this enormous channel for years to come. So yeah, we could turn around from 146.40 and come back to the 140.00 area, at least on the first move. So yeah, I think I would try that. But I'd also be ready to, what's this peak here? 146.89. I mean, it'll be tricky, but I'll try and judge it. And if we break above the trend line convincingly, then I would, of course, be talking about buying into long positions, because that really could be something very significant. Going to the monthly chart, we broke above there, who knows? We could end up heading for 160, 188. I wish I could identify clearer patterns on this. I really can't. But anyway, we have got a breakout. At least we had a trade. Anyone got any questions on this pair?
No, I think I'm good.
Okay. So,
And I've got a question.
yeah.
Because it's like such a long time channel of long-term channel. The breakout for you is enough to put in a order. So you're not looking for a Fibonacci or moving averages or something like that.
Not really. Let me go back to the chart. It's a good question. So through this whole sideways action that we had over the last 2 years, you can see how the moving averages are absolutely useless. They're not really of any use in finding low risk trade opportunities. I mean, occasionally the blue 100-day moving average has had an effect. Occasionally the red 200, well, not really. Well, here it did. But I would not be relying on these moving averages to identify a trade opportunity. And fib levels are a complete waste of time when you're just going sideways. I mean, if I put that on, they're just no use whatsoever. Which is why I like bull or bear trends, because you can actually use the moving averages, the Fibonacci levels, that kind of thing. So there you go. Did that answer your question?
Yeah, thank you.
Cool. Okay, so I'm now going to look at the dollar index, because the dollar is the only thing that's really moving at the moment. The yen is a mess. So the dollar index, again, sideways channel, broke up through it, came back, did a retest. That was the golden opportunity to jump back into the dollar. It's had something of a recovery. It's a slow recovery. We had a good few days, but it's stalled. Well, stalled probably because we're heading into Christmas and the market's not that interested. Traders are not that interested. I think for that reason, well, I'm pretty good. I've been bullish of the dollar for a while. I have, since we broke out of that channel. Same reason I was bullish of dollar CAD. It's just a bit slow to materialize. Going back on the weekly chart, look, we are in bull trend. There's no doubt about it. From 2011, we are very clearly in a bull trend. Again, you'd have really struggled to hold a long position from 2015 through to 2021. That was 6 years of just horrible, messy nothingness. These sideways channels can really last a long time. 6 years, that one. But then eventually we took off, and then we collapsed. Again, that would have completely fooled me. I'm not going to lie. I wouldn't have expected that massive pullback. Then we decided to consolidate, and now we've broken to the upside. So I'm hoping this is the beginning of a bull run. I'm going to go on to the dollar Swiss as well, because we've got something similar there. Yeah, okay. Well, similar, maybe not similar, actually. It's not quite the same pattern, but dollar Swiss is pretty boring. It doesn't do an awful lot. But I think we might have something more bullish in the short term. That's the weekly chart. You can see here that we, again, had this horrible random sideways thing going on, but we've broken above a trend line that goes back to 2020, beginning of 2023, or even the end of 2022. We've beaten that trend line. We've beaten the 100-week moving average. We've beaten the November peak now, although we pulled back again. I don't know. I think that this is the start of a bull run. I mean, I'm clutching at straws a little bit because there's just nothing else out there. But the first break, I thought, here we go. We'd beaten the 500-day moving average. We'd beaten the 61.8% fib. We'd had a nice daily close well above there. So I don't know why we turned around and reversed, came back below the 500, back below the red 200, down here. But I stuck with my theory that we would eventually go up. And I had the buy above the break, buy on the break above 89.10. I had that in the trade ideas for a long time. And really, that was just once we cleared this peak, the 61.8, the 500-day moving average, then I thought it's time to get back in. We've cleared it, and we're going mostly sideways, because yesterday, although we went up, we pulled back. And I don't know, maybe we'll chug along sideways for a little bit, but I think we've got a bullish bias for that reason. And, again, when you look at the chart going back to 2022, 2 years ago, it does look like we should at least get to 90-25, 90-40. There's nothing to stop us getting there. And I think eventually we can get to the 50% fib around 92-20, 92-40. But it might be a slow journey. The euro really should be showing us some indications that we should sell it. Based on that, it should be showing that the dollar is going to strengthen. But I'm just not seeing it from the euro chart. I don't know what to make of this. It's a horrible mess. I suppose you could say we are in a bear trend. You could definitely say that. We've been in a bear trend since 2008, global financial crisis, erratic as it has been, but we are in a bear trend. We rejected that trend line here, the 15-year trend line here. So that says to me we're in a bear trend and we should probably head lower. You can see that, can't you, pretty clearly. But again, we've been trapped in these horrible sideways things since, at least 2 years. I mean, how do you trade that? Moving averages, flat line, converging. That's what happens in a sideways trending market. Fibonacci levels, absolutely useless. So I did have a selling or a break below this trend line, if I remember correctly. I mean, we got stopped because the market just turned around and went straight back up again. I guess we should expect a break eventually below 104.00, which should build momentum to the downside, and we should collapse based on those reasons that I've given you. But as you can see right now, we're doing nothing. And I haven't really had a euro trade idea for quite a while for that reason. There's just no point in getting involved. This candle's quite interesting. You've probably seen this before, but let me just remind you because it is important. There we go. 2014, 10-year trend line. We broke above it. I got all excited. But then we plunged. We're back below the 200-day week moving average. We're back below the 10-year trend line. We're back below the 50-week moving average. We obviously couldn't hold above the 500-week moving average. So again, I think there's a negative bias to this market. We have to break out of the channel. You can see my trend line. The lower trend line goes back to March of 23, the upper trend line here. So that's a very clear channel. Again, moving averages are just flatlining. I'll go to the daily. Moving average is no use whatsoever again because we've been flatlining, we've been sideways for so long. Moving averages are flatlining and converging. Trend lines are the only thing we can really rely on. So for me, it's just a big question of why it was at around 125.26. Do we bounce off 125.26 or do we break below it? So I would take a break below the previous swing at 124.84. That's obviously 40 pips below the trend line. But if we break that, I think you can say that it's time to sell and the market should sink, maybe build some momentum to the downside. These are not the greatest ideas at all, but they're all I've got at the moment. One thing that has worked well, finally, after we had two or three dreadful weeks, was selling the Aussie dollar. And again, not the greatest reason to sell it. I mean, this is just horrible, random mess. The only way I could really get any idea at all was to drill down to shorter term charts. And I just went for this bear trend here. The break below the trend line was really messy and horrible. Look how long we hovered back and forth up, to the trend line. Eventually we broke. I think it was this run up here that I managed to get a short. And then I managed to get a short again sometime. Was it Tuesday or Monday? No, it was the end of last week. I think it was this one. Yeah. This spike up to 64.29, which was a bit of luck actually that we spiked up there. There was a bit of an ambitious sell, but we managed to catch the high on that move. So we've caught a couple of good trades in the Aussie, and I've got some ambitious downside targets because I think we should tumble. We're tumbling nicely today. So that looks all right. Let me just see what my targets are. I've forgotten what I was doing with that one. Aussie. So 62.50. Yeah, I've given us quite a lot of quite an aggressive target down there. That would be actually that would only be 18 pips. Seems so ambitious in these sideways markets, but really that's only down here. So it's just at this trend line I'm going to take a profit. I mean, not bad. No one's going to complain about 80 pips in this market, but it's a bit sad when 80 pips seems like a lot of money. I mean, we were doing trades earlier in the year when everything was grabbing 80 pips profit. But unfortunately, those conditions don't exist anymore, so we can only do what we can do. New Zealand versus US. Okay, that's a slightly better formation, I guess, if you like. The parameters are pretty clear. Got a hell of a lot of trend lines on there. I should take a few off. They're a bit confusing. Don't need that one. I like to leave the trend lines on because they can become relevant again, but I think I've overdone it there. So a break below that trend line had to be an obvious sell. Again, it was horribly messy. Anyone who was a breakout trader would have got stopped out God knows how many times before actually getting on the trade. But fortunately, we didn't get stopped out too many times, and it actually worked quite well. And then we got this little spike up here, 58.17. Yeah, that was bang in the middle of the sell area, 58.50, 58.20. That was a bit of luck, and we're on side on that. What's my targets for the New Zealand dollar? 56.90. Okay, so we're just coming up to my second target, and hopefully we'll hit 56.90 eventually. It's not really that ambitious. It's only around here, and I will probably look to sell again if we hit that target. But that's quite a nice breakdown. And longer term, well, are we in a bear trend? Yeah, we are in a bear trend longer term. I guess you could say that. Certainly since 2015. So that's kind of examined everything that I'm looking at. What else have I got on the sheet? Let's just have a quick look at the Euro Swiss. I've got that trade idea today. I'm trying to remember why I suggested it. Oh, yeah. It really is just a breakout trade. So the trend is very, very short term. I'm looking at the 4-hour chart. The relevant one is the one going back to August. Yeah, that's the relevant one. Okay. So just isolating this bit here, we broke above the trend line. We retested it here on the 16th. That was where, did I get us in there? I think I did. No, I got us in yesterday. That was quite a dramatic pullback, but it did give us an opportunity to get back in at the break point, the trend line, the 50-day moving average. Now we need to get up through the 100-day moving average, which is roughly the same value as the 500 period moving average on the 4-hour chart, I can tell you. It's just a few pips higher. So if we can just move through 9400, things would be looking a lot more positive. And if we can get up through 94.17 for the Euro Swift, that would be, well, another buy signal really. And then if we can get up through these peaks, which is 94.43, 94.46, that would be another buy signal. And hopefully we can then get to 94.85. Does that make sense? Any questions on those?
Makes sense.
Okay.
Makes sense.
Cool. I'll look at the Euro yen because that's the only other trade idea that I have. Right. Why was I doing this trade? Okay. 1-hour chart. I mean, this really was the problem for me over the last I had that real bad run for 2 or 3 weeks when things stopped moving, and I was really pushing myself too hard to find trade ideas. I really was. I've got to stop that. And this was a bit dicey, really. I kind of said to myself, stop being desperate and looking for trade ideas. But anyway, this one came along. This is a 4-hour chart, isn't it? 4-hour chart, Euro yen. Okay, so this is my 4-hour chart. I've got pivot points on here, which I'm experimenting with again. I always re-experiment with stuff. They're kind of working, they're kind of not. I had Bollinger Bands on here for a while with all the sideways actually, but Bollinger Bands, they just don't work for me. I don't know if they work for you. Right, so I had this confluence of Fibonacci levels around the 162.5 area. I had the 200 period moving average on the 4-hour chart. I had this trend line, and I just thought, sod it, I'm going to try it. There's no trend, there's no pattern, there's nothing really. I just went for it. because I had to try and find a trade. It was a combination. I mean, you know, the 200 period moving average doesn't really even coincide with the fit levels. The trend line kind of does. But anyway, I went for it and it worked. So I kind of got a bit lucky, to be fair. But that's the problem I've got in trying to find trade ideas. I mean, it's just such a struggle to find anything decent. And that was one of the best that I could find. Okay, we've done half an hour. That's pretty much it for my dollar trade ideas now. I'll show you gold. I'm only going to show you gold because I've run out of ideas. As most of you know, gold has been my favorite market for a very long time. I've been pretty good at it, but there's just nothing happening. And I've completely backed off from it now. Actually, I had some minor support and minor resistance levels in the report, which I didn't put on the trade sheet, and they've actually worked quite well. But we are stuck in this channel. Even the 1 hour moving averages are now absolutely useless. They're just flatlining and going sideways. Fibonacci levels, again, no good to me in this kind of trade, in this kind of trend or lack of trend. So yeah, you've got to know when to trade and when just to leave it alone and let something develop. So despite gold being my favorite market, I really can't do anything with it at the moment. We should have good support around 2,600, 100-day moving average, trend line going back to June, Fibonacci level. So if we get down there, I will try along. We probably will get down there eventually. A break of this trend line at 26.22 should signal that. So break below 26.20 could trigger a move to 26.05, 26.00. Hardly the most exciting trade idea, but there you go. Yeah, I think that's pretty much it, really. Anything you want me to look at before we run out of time?
Maybe oil.
Sure.
I don't know if you trade that regularly, but
I
see it in the report, but I never see it in like a trade ID. So it's just too difficult at the moment, I would say.
Yeah, you're right. I don't.
Okay.
For some reason, I don't particularly like oil. I get it right. Fair enough. The amount of times I don't like trading it myself. Anyway, look, it's pretty obvious what's going on here in oil. Oh, surprise, surprise! It's a sideways market. There we go. So sideways for 2 years. I mean, so erratic. I can't put a label on this pattern at all. Even, well, this trend line's kind of working. I've left it on there, kind of. It's not really the most reliable trend line. There you go. Maybe I should have more of this kind of thing, should I? Or maybe not. I'll leave it on anyway. But look, if you can make sense of it, you're a better analyst than I am. We're only going sideways. Okay, there is a triangle pattern here on the 1 hour chart. We have broken above it, but there's just no follow through to the upside. I guess you could say that I should have a bullish bias based on the fact that we've broken above this downward sloping trend line of a triangle pattern, of a 2-month triangle pattern. We've broken above the 100 and the 200, and now the 500 hour moving averages. Looks like we should head back up to that 71.40, 71.50 area, which, as you know, has been a bit of a level for me. So that's worked quite well. I've been quite lucky picking the levels, actually, bearing in mind how tough it's doing. I should probably stick some fibs would work on there because we have something of a trend. So 71.15, 71.40 would be the area to watch. Break above there. Maybe we can head up to 72.50. There's just nothing for me to get excited about, though, because, you know, we're just back and forth. That's how I would put my trend lines on there and just watch for a break of the channel, really. But even when we broke above that trend line, you know, we didn't exactly accelerate to the upside. We managed to get through the 38.2% fib and then just turn around for a retest. So maybe I should be grateful for these retests. Gives us an opportunity to get in.
All right. Perfect.
All right, folks. Thank you so much. Cheers, Jason.
Happy holidays if we don't see each other.
All right.
Cheers, guys.
Right.
Bye-bye.
Bye-bye.